in March, February has not met his target at all. Suddenly in March, our friend gives 10 crores in a small branch. Good for us because it's, tech to the fee. But that is also an analytical procedure. Month-wise, how much loans have been given. Right? So these are analytical procedures. The second test is test of transactions and balances. Now, I'll give you a small example. How do you calculate CCOD interest? Anybody has done concurrent? No? CCOD interest, how do you calculate? What method do you use? It's called the daily balance method. So, you take a CCOD account, it will show for a particular month an amount of interest. How is that interest calculated? You take the daily balance, you multiply by the rate, and you do divided by 365. Annual rate is 12%, divided by 365 is my daily interest. Now, you have to do this test. This test is called computation. You will have to keep it in your working paper. Do I have to do it for all CCOD accounts? No. I take 5 CCOD accounts. Even in 5 CCOD accounts, you have 60 months. Are you going to do this for 60 months? No. I will do it for 1 month per account. And I will have only 5 Excel sheets. 12 Excel sheets for the 12 accounts that I am checking. I'll take for 1 month January, 1 month for February, 1 account for May. Whatever I feel like I'll do and document, I need to test. So that's how you validate interest. So inquiry is you call up a customer and find out if the unit is there. They've given the phone number. You call up and says, okay, yes, this is Naga detergents, let's say. So you know Naga detergents exist. That's inquiry. Computation, analytical review, inspection. Inspection is what you do when you say, okay, I want to go do a site visit. I want to do a client visit. This year again, my request is try going to a few units, sir. See, today, if somebody is going to judge your work after 2 years, you'll have to tell them, look, I've performed all audit procedures, which is more or less relevant. And in a banking context, inspection is an important procedure. But there again, you can rely. If there is a chartered accountant who has done the inspection, you document it. The other important thing is, of course, engagement and planning. Master circular we finished. Concurrent audits, RBI audits and inspection audit. We said bank audit is very tough, highly risky and all that. You have a big advantage. There are so many people who keep auditing the same branch. You can, at some point, take some part of their work to check. See, today if it's gone through a detailed inspection process, don't keep repeating the same thing. Of course, for top 50 loans during your period, you do an independent checking. But today when I am looking at concurrent audit report, I will take a call or RBI report. Any account which has a balance above a certain value, I will note down quickly what is he saying, what is the defect. Quickly see whether the defect has been rectified. Now again, here most of us don't do this, but you must set a materiality threshold for the branch. Under this amount, I will not see. If a particular category of advance itself is only 1 lakh. Say for example, I know there is a very strong temptation, you keep on seeing staff loans. You spend 5-10 minutes on staff loan. Don't do too much. The staff should be there in this branch. Is he there? Show me the staff loan. In lots of cases, what would have happened? Staff would have got transferred, but the loan will be here. Only that you need to recommend a transfer. And that also before the balance sheet date, if he does not do the transfer, does not matter. Put it in the LFAR and keep going ahead. For him to do the MOC, this adjustment, that adjustment, this is of course a very simple, it is an inter, they have to just move it out of the branch completely. Don't spend time. Some of these which are related to staff, essentially, here I think I should mention to you 3 important terms. Inherent risk, control risk, detection risk is equal to audit risk. Inherent risk in a staff loan is low, no problem. So where my inherent risk itself is low, everything else will become automatically low. Inherent risk in advances is high. Inherent risk in CCOD is even higher because it's stock and book debt. In other cases, you have a machinery, you have a house, it's all fixed. And there also, book debt is even more risky. No? I can book a debt in the name of my own sister company. So it's still a book debt. In India, we don't lend on consolidated balance sheets. Right? So where inherent risk is high, how much of control is there? Very good control. Inherent risk is high on cash, but banks have very, very strong control on cash. So if my inherent risk on cash in a bank is, let's say, 50, my control risk will only be 5 or even lower, because I have a daily cash out, I have dual cash custody, A has to sign, B has to sign, checking has to happen. Detection risk. Detection risk is what we should be concerned about. Where an audit procedure fails to detect. Detect what? A material misstatement. So don't be bothered about small values. So you will have to do far more audit procedures where your inherent risk is high. Can somebody tell me one more item other than, let's say, one CCOD where an inherent risk is very high? Jewel loans. Jewel loan inherent risk is very high. Why? It's a packet of jewelry. Now, if you look at I think there are, some of this I'd like to get some view from you also. Do public sector banks seal jewel packets? Okay, because private sector banks I've seen uniformly, they seal the jewel packet, and the jewel packet can be opened only in the presence of the customer or a notary public. Whereas here in some banks, when everyone says, sir, show me the jewel loan, everyone will come and open all the packets. Jewel loan's inherent risk is high. Jewel loan which is expired and not redeemed by the customer, inherent risk is very, very high. If somebody is, for example, there's somebody, see, I'm not saying all this will happen, but today when you talk of independence of an auditor, people use the term professional skepticism. Today the logic is your control has to be so strong that you don't give any room for an incentive or a threat. There is obviously an auditee threat. I have to collect the loan. I have to collect so many loans. Not much incentives in banks. Nobody gets paid based on collection, so there's nothing to worry. So wherever there's, so today if you're talking about jewel loans, you have to perform a completely different procedure, which I'll come to later. We'll do jewel loans as a case study. So this is very important. So you use compliance and substantive tests, audit working papers, and your reports. Balance sheet of a bank as finally presented comprises of all these. What is relevant for us is deposits, borrowings, advances. We do that SFBM, that the fixed assets. This is what we spoke about: core banking, master data, transaction data, access restrictions, and business process logic. I have another 15 minutes more to find up, including the document. I'll extend by about 5 minutes. I'll tell you one very nice example. In this budget, a new bank has come. Can you tell me the name of the bank? Starts with M. Mudra Bank. Now, if you looked at it previously, when Tally came, he said, see, I want a nice accounting system which is flexible. I'm a small businessman. I could make some mistakes, so I will delete. I want to pass an entry. So they said, okay, Tally is a good system. That means a system came to work around your business process. But CBS is different. CBS or SAP tells you how to work. It says if you take CBS, this is what you have to do. Okay, you can do little customization and dilution, but this is how you have to work. Very similar to Mudra Bank. See, until Mudra Bank happened, they said you need to have an identity, then you can become my customer. Whereas this Mudra Bank, which has now been set up with a 20,000 crore corpus, primarily for very small enterprises, says, you come and bank with me, I will give you an identity in India. It's completely changed. And why has this become necessary? Even in Tamil Nadu, I'm sure even in Andhra, you have, places where trade is very organized. We have one such place called Karur, very famous for textiles. They used to have a very organized money market. There will be, all the lenders will join together and say, below this rate you cannot lend, above this rate you cannot lend. And lending does not mean signing a loan application in 50 places like this, like this, like this. It used to be one document. You want the money? Come at 10 o'clock and pick it up tomorrow. It was easy. And then there are so many governmental regulations, controls, chit companies, NBFCs, all of which might have had a rational background. I'm not debating that. But money to the relevant people became very, very small. So today Mudra has reconfigured the way banking is supposed to be done. You have a 20,000 crore corpus that they have put, 3,000 crore credit guarantee, which is huge. Similarly, CBS has transformed the way banking is done. It's control driven, it's control driven. So it makes your life easier as an auditor. Now, if CBS is there, do you need to do an audit? That's the most important question people keep raising. My counter view is, today CBS is there, could you prevent a 55,000 crore NPA or whatever is the number? Because today it is up to there is finally a person. It is only a system. There is a person who has to exercise discretion on a transaction. There is somebody else who has to pay. There is a security which has been offered. And then we go back to the Rigveda story and you put it all in. Not today, not for the next 20 years, for the next 100 years, bank audits will still be there. So, CBS is only a tool. It does not. Similarly, NPA classification finally is manual. Automatically, system should keep classifying NPAs. But then these are not good for the markets, because again today something automatically goes and falls into an NPA bucket. What is the manager's incentive? Manager should stop something from going into an NPA by exercising diligence. And CBS finally is a very good audit enabler because it permits simple views of large transactions by Excel manipulation of text files and helps us to profile and stratify data for sample selection. Now, before we come to this, the need for Excel in bank audits, I will walk you through how I would typically do an audit process. This is basically a work paper template that will help you to document your bank audit top down. You can go through this template in leisure. I will only walk you through the headings for the next 10-15 minutes. And this is typically, it's in Word, so you can add, delete. For example, I don't think I've put crop loans. If you feel, you can put in crop loans. I've done some loans in greater detail. So, this is actually segmented into 30 headings running to about 50 pages. So, any extra sheet you want to create, you create behind that as 50.1, 50.2, etc. It starts with overview. It says we have been appointed as auditors of dash bank, dash branch for the year ending so and so, so and so. We have communicated with the retiring auditor. In any bank audit, a lot of the wordings are standardized here. All bank audits, it deals with only those risks that I spoke about. Balance sheet should be true and fair. Assets should not be overstated. Liabilities should not be under or overstated. Income and expenses are properly recognized. IRAC norms are followed. KYC AML norms are followed. All banks, it's the same thing. Suppose you are auditing a bank where you have something extra. Bulk of the loans are textile loans. Then there is a particular scheme that was given called TUFS, Textile Upgradation Fund Scheme. So in your bank, that will be added. What is a common, any specific lending that happens in Nellore? Essentially crop loans, jewel loans, CCOD. If you find anything unique to the branch that you are visiting, you may add that here. So I have a top sheet like that. Bank name, branch, date commencement, what is the name of the manager, phone number, the circle office contact. This is the table of contents, which I think is not very clear. So the first is objective and scope of the audit. See, this is basically a simple thing. You can update field. Whatever you add below will get updated here. But again, don't pay too much attention to all this. You can delete this and do it, or even not have this index. So, objective and scope of the audit. We have been appointed. The key terms of reference is to certify the financial statements. Following are the key reports and certificates that we have to issue. Whatever you saw in that. Audit commenced, completed, necessary for your closure. Key risks in bank branch audits. What are they? Again, in the top-down approach, you should know who you spoke to. So you please note that down. 2 years later, if there is a query when your peer reviewer, you have a doubt, always come back, clarify. Part 2 is scope limitation. See, this is what I was telling you. You are asking for 100 files. If 10 files they have not given your article assistant, he has to come back and tell you. So here is where I said, for example, don't go and put all the loan number here. Just, this is page number, I've got the page number here, page number 8. So you go here and just change it to refer 8.1. That also you don't need to type. Once you take a printout, put 8.1, attach it. So finally, when your article assistants finish 70% of the work, they should come and give this full bunch to you in the same order. So similarly, you asked to visit certain units, they did not take you there, so you say 8.2.